Hello, everybody. Anthony Garcia here from Trader's Ultimate Edge. It is December 27th, and I have finally gotten my recording software working again on my new computer. Hey, let's look at the markets today. We, of course, just had it blast off to new all-time highs here. New all-time high is 47.84 on the ES. It just blew through the previous number. Absolutely no stopping that freight train today. Now here's what I want you to pay attention to. We are sitting right around a couple of the big trend lines. They're right here, and they go back quite a ways. One of them comes from the low on December 10, and the other one goes all the way back to a high on 26 October. And both of those have been hit numerous times. You can see it plays around with them. So we do want to make sure that we've got those on our charts. We've also got this new one that it's just created right here, coming out of the low from December 20. You can see this one's held pretty well. We also are moving at a dramatic pace back towards this big trend line from, let's see how far this goes back. This one was a ways. Let's do it like that, huh? Yeah, so this is the big one. This is actually the big one from post-corona. So you can see this big trend line right here is the one that just came out post-corona. In fact, I'll zoom all the way out if you haven't seen this one yet. So you see this here, main trend line from post-coronavirus. It starts there. The lows in early April. Hit, all the way along, and then it fell under it when we had that big pullback in September, and it had some trouble getting back over it, and now it's making a beeline back for it. And I think it hits it. Let's zoom in and look at it. Okay, right here. Right now it's 48.40, something like that. It's going there. I don't think it goes there tomorrow, but I do think it's going there. Look for that the next couple of weeks, I would say. You know, it may need to follow these trend lines here for a little while and get squeezed up a little bit by them before it can make that huge move, but it is going there. Absolutely no doubt about it. Because now we are past the Fed. We have really good clarity revolving around the Fed, revolving around interest rates. Expecting probably 3 rate hikes next year, and if you look at the CME futures, you can see that March is baked in. Let me just go ahead and pull this up real quick, and actually we'll look at it together. It is. So here's CME, the rate hike futures. We can look at March 22, and we can now see that a hike is now 58% likely in March of this next year. So this is most likely where we are going to get our first rate hike. And this is the target down here. There are even some people that are predicting it going as high as 0.5 to 0.75. I don't think so. I think we get right in this range, maybe up to 0.5. And then you can see as it goes along, these numbers kind of change. This is a really interesting tool if you've never seen it. Search for CME federal rate hike probabilities or something, and this will pull up. You can see it right here just through the CME group. So we do have a lot of clarity there. We have a lot of clarity regarding Omicron, that it's pretty much just a nomicron at this point. There's nothing about it that is going to stop this freight train of an economy. Nothing's going to stop it. So with all the clarity that we're seeing regarding these issues, the market is free to rally further. It's free to rally further until it gets something that will slow it down. This week, we have no economic news of any import. We do have some on Tuesday. We've got consumer confidence. Wednesday is pending homes. Thursday is jobless claims. I don't expect anything really important out of those, though. I think the rest of this week, we should hopefully see some good ranging action. It's like, this is great for, any long trades that you might be in or any for your long-term portfolio, but it's not really great for trading because you don't really get the pullbacks that you want in a trending up market. You don't really get the pullback to enter. So what we really want to see is more of a ranging market. And this big move today kind of makes me think the market might take a breather now that it's at all-time highs. Because if we go back here and look at the previous all-time highs, so here's what happened last time. We hit all-time highs right here. This was after the Fed. This hit all-time highs and it sold off. Now, I think it was on coronavirus news or something, but it did sell off. Previously, after hitting all-time highs, we sell off and go into a ranging move, sort of a ranging look right there. And then over here, we sold off and got into a ranging sort of a look. So I expect it to happen again. And I expect it to go down to this trend line or to this trend line. Either way, look for previous all-time high to hold support. That's what you want right there. You want that number to hold support. That's 47.43. If that holds support, then we can confirm this move and make it higher, and that's what I really want to see. We get a pullback to this and it holds. You get like on your 15-minute, a really nice looking hammer candle, like if you don't know what a hammer candle looks like, it's this right here. See how it pushed all the way back up on the wick? It looks like a hammer at the top, right? Sledgehammer or whatever. That's what you want to see. You want to see it hammer candle right off, like this area of support on real high volume, intraday, maybe on the 15. I'd like to see it on the 15, and that'll tell me we're good to go long again, and I'll probably take SPY calls at that point. So there's some trade ideas for you tomorrow. Let's watch what it does overnight. Like I say, I believe this comes back. It's going to sell off, and then it's going to range, and that's going to give us a better entry opportunity. So thank you, everybody, for listening. I love you all. Take care. I'll talk to you tomorrow. Bye-bye.